Welcome back to the Property Frontline. Today I'm here with Vangeli Kollias from VK Financial. Hi Vangeli.
All right, Deb.
So Vangeli is the financial teammate for first home buyers looking to make really good financial choices as they embark on this stage of their journey. Correct?
Perfect description.
Okay, well, let's just jump into our session today, which is how to be a first-time buyer that the banks say yes to. It's always a bit tricky and people do get confused. There's so many decisions to make and often people start running down looking at property when really we know they need to do something else. But to get us started, so Vangeli, tell us a little bit about what you do.
So thanks, Deborah, for the lovely introduction. So Vangeli Kollias, the finance teammate for VK Financial. Pretty much we work in between yourself, the client, and the bank, and we help you get your loan approved. So customer comes to us, we want to buy our first home. We go and look at all the banks that we're accredited with. Our mortgage brokers have about 40 to 50 lender accreditations. So we pick 3 options that will give you the best chance of approval, and then we recommend a loan product to you that will give you that loan approval for your first home or investment property. In short, that's pretty much what we do.
Yeah, but it's so much more complex than that. It's so many choices.
That's
and what
right.
you do is kind of take the pain out of that choice. So it's sort of a little bit less stressful for people. But yeah, so why is finance the first step when you're a first home buyer rather than property first?
Well, unless you have a money tree in the backyard or $1.5 million in cash just sitting there, usually most people need to go to the bank to get the money to purchase their first property. So from the start all the way to even just managing the property, finance is so crucial. So obtaining a pre-approval for your first purchase and then getting the final loan approval, and then even after settlement, finance is still crucial in managing that loan repayment across the 30-year loan term or however long you get it for. So yeah, finance is definitely a very important step, not just for the purchase, but for the whole duration.
Yeah, for the duration, because it changes, right? Like we see different interest rates. But when people are thinking about making a property purchase, they really need to get an understanding of what their budget should be so that they know, what they can buy.
Yeah, exactly. I mean, usually we get a few inquiries where they've gone to an open home and they've looked at a property and then they come back and there's, their capacity is well below what they're looking for and they sort of have to change the whole strategy. That's something that I did when I first started. I looked at a home in Western Sydney and went to my broker for borrowing capacity and I was $250K short.
Right.
It definitely has an impact. But more so just gives people an understanding of what they can actually do rather than what their sort of dream or what they're looking to purchase later on. So yeah, it definitely is important to get that step finalized first before you end up going and making that purchase.
Yeah, that's so true. And particularly in a competitive market, which we are in, agents really much prefer people who are already pre-approved. And so you'll get preference from the agent if you say to them, I've already spoken to my broker, I'm pre-approved. Okay. And so while you're going through that process, what are the banks really looking for so that you'll get your loan approved? They'll say yes.
So banks really just look for a few things. So the first is credit score, credit history. So that basically just shows the banks your ability to either make repayments via previous mortgages or credit cards, and it just basically shows if you've got any undisclosed debts. But usually as a mortgage broker, we see that in your credit scoring as well. Even missed repayments can affect your credit score. So again, it's really important to check that out before you go and I guess lodge your loan approval. But mainly the main gist of it is as long as your income can meet the bank's mortgage repayments, your monthly expenses and any liabilities, if that's a net positive, then pretty much you're good to go. But the key thing is that the banks use what's called an assessment rate. So let's say the interest rate is 6%, they'll put a 3% loading on top of that. So you'll have to show the bank you can assess the mortgage repayments and all your living costs and liabilities at 9%. And pretty much from there, that's just to safeguard the bank over a 30-year loan term in case of any interest rate increases, which we did see over the course of a few years ago. Look, as long as that's a net positive and you can show the bank to do that, then you're pretty much good to go in terms of a pre-approval and even a loan approval.
And so they also look for genuine savings too?
Yes, that's correct. So if you're buying with a 5% deposit, usually the banks will look for what's called genuine savings. So that shows the bank your ability to save and hold money for a given period of time. And it's usually for 3 months. Now you have to show the bank that you're saved.
Wow, only 3 months. That's pretty good.
Yeah. So pretty much the lowest amount in your savings for that period, but it has to be 5% of the property value. So for example, if you're buying a $500,000 property, you need to show you've held $25,000 in genuine savings. So today's date's 27th of May, so we go back 3 months, May to April, April to March, March to Feb. So in your account, 25K has to be held there from the start of February or from the 27th of February. So yeah, that's an important sort of term that mainly first-time buyers don't quite get until they know about it. It's not just about having the savings, but it's also having the savings and keeping it there in your account without withdrawing lower than that amount.
Yeah. Okay, that's a really good tip. Okay, and so what are the key yes factors when preparing for loan approvals? Or have we already just answered that?
Yeah, look, it's kind of similar to what we said before. So pretty much a yes is, again, those factors: credit scoring, income, meeting the expenses and liabilities. Things that may not be a yes factor is, again, not disclosing any liabilities. So as brokers, we see your credit scoring. So if you have a credit card opened or a personal loan or car loan, that does affect your borrowing capacity. So that can hinder your borrowing capacity or the amount you're looking to get. Again, any sort of red flags with your expenses. Day-to-day spending's fine. You go on a holiday once every now and then, that's okay. But, non-stop Afterpay and Zip Pay, and on top of that, gambling debts as well. That stuff can hinder your sort of ability to get a yes on a loan approval.
And what about HEX debt? Is that, I can't remember, did they say that they're going to not include that in the assessments now, or is that about to change?
No. So I think they were thinking about doing that. It hasn't been confirmed by politicians or anything like that. Right. Yeah. So I don't really see how it can be if it's getting deducted from your pay slip every month. So look, that is it. But HEX debt is something to actually point out. HEX debt is a liability according to the banks, but it's based on your gross annual income. So for example, you have 75,000 gross annual income, and one client has 50K of HEX debt, the other client has 150K of HEX debt. The actual monthly repayment is the same assessed by the bank. So, so as long as, depending on your income, that's the payment that gets taken out or assessed by the bank as the liability.
Yeah, okay. And this sort of a question without notice, but what about employment these days? Do you have to be employed for a set period of time?
Really good question. So employment actually varies with lender policy, but pretty much, for example, if you started, let's say you've been working in industry for more than 12 months and you change jobs, but you're in the same industry, most lenders will actually negate any probation period, like having to complete that. As long as you have a contract and one pay slip, it's fine. So if you have experience in that same industry or same role and you've moved companies, literally just need a pay slip to evidence that you're working there to be able to use that income. Pretty much if you're changing industries completely or changing roles completely, then some lenders will need at least that probation period passed in that given time.
Yeah, okay. Alrighty. And do they do as deep a dive as to make sure that you've lodged all your tax returns are up to date, anything like that, or is that?
Well, no. So that comes from that's more the self-employed customers. So with self-employed, usually full documentation. Some, for brokers, for our point of view, we see the last 2 years of financial tax returns and statements. Some lenders have some simplified policies, they call it. So simplified meaning a quicker verification. So some lenders do 1 year of financials only. So you can just base it off the 1 year. Some lenders do an average of the 2 notice of assessments without having to provide financials. And some lenders also do director salary credits. So if you run a company and you're a director of the company, and you pay yourself a salary for 6 months or more, they can actually use that salary entirely if the loan service is on that amount without having to use your financials. And there's also some lenders that exclude company debts entirely. So any company cards, credit cards can be excluded from servicing. Of course, there's limitations on how much you can add back in depreciation and interest. But yeah, with self-employed, I think ever since the COVID era, when I first started the industry in 2020, definitely has been more flexibility with self-employed in terms of full documentation or even just getting a home loan. Yeah.
But for most first-time buyers, they'd be employed by, like, they'd be in employment.
Yeah.
Not necessarily have their own businesses. But yeah, it's really just about having all their documentation ready and having a good savings record.
Yeah, so pretty much the way at my first home buy event 2 weeks ago, I put a picture of Abe Simpson talking to Bart Simpson and the kids in an episode of when they go take over Shelbyville. Now, pretty much I'm Abe Simpson and the kids are, the banks, right? So what we do is we paint a story to each of the lenders about your full situation scenario. So it's very important that as a customer, that when you talk to your broker, that when we ask for documents, we ask for employment info, personal info, pay slips, bank statements, savings histories. We ask for all that info so that we can paint that story to each of the lenders on our panel that are going to give you the best chance of approval. So the quicker, a customer provides all that info, the better we can give you an accurate borrowing capacity and give your lenders that will give you that best chance of approval. Because at the end of the day, right, our job is to get the loan approved, and we need to know everything about you, not just I own $100,000, just 2 payslips. We need to know the whole stories. Yeah, very crucial. I know there's customers, they say there's a lot of documents, but that's pretty much why we need it, so that the bank will ask for it. So we rather sort that out without you having to sort that out at any given point in time.
Yeah. And I'm sure you'd make that part of it fun so that it's not too stressful for anybody.
Of course.
Okay. And in relation to loan approvals, what are the different types of pre-approvals that people can get?
Great question, Deborah. So pretty much there's two types. There's automated pre-approvals and fully assessed. So there was stats run around with the bank BDMs that about 70% of pre-approvals don't actually get converted in that first 3 months. So a lot of the tier 2 or tier 1 digital lenders, some of them do automated pre-approvals instead. So basically, as long as you put numbers in the system and it's all positive, they'll give you a generated computer pre-approval. Now, actually, a human actually hasn't looked at your application, so they can't look at your file until you actually put an offer down on a property. That could be as little as a 0.25% deposit or a 10% deposit at auction, right? So if there's any issues that come up, it's only after you put a deposit down on the property, especially buying your home. It's a very, very risky strategy. Whereas fully assessed pre-approvals is pretty much a human looks at your application. So anything that may come up before you put an offer on the property will be sorted at that stage. And that they can take up to 1 business day for some lenders to as quick or as long as 5 business days. So yeah, as a safeguarding your risk, you want to have all your sort of issues, if there are any issues, they're nailed at that pre-approval stage and they're approved on that basis, because once you're pre-approved, you just need to make sure your financial situation hasn't changed, and you pretty much, once you find the property, there are 2 extra boxes to tick and that's it.
Yeah. Okay. And so do the pre-approvals run out?
Yes.
Yeah.
So they're valid for 90 days, your
Okay,
pre-approval. Some lenders will allow you to extend the pre-approval for another 3 months without having to do another application. So it could be from 3 months to 6 months, but then after that second time, you'll have to relodge an application. So continually not finding a property and continually getting relodgements of applications is going to keep hitting your credit score. So
yeah,
if you're going to get a pre-approval, like in that 90 days, try and be as vigilant as possible. Try and hunt the property as best you can.
Yeah, so much pressure, isn't it?
I know.
Yeah, and that's why it's sort of important to work with someone like you who can give people comfort around the fact that they're almost approved, and then once you actually find the property, then as long as nothing's changed, then you would submit the application, because that's when they get a stamp on their credit score, don't they? And the clock starts ticking. So it's very nuanced, and it's actually easy to do as long as you've got, really good people on your side and you at least explore the process before you go and make an offer on a property or fall in love with something. Yeah, okay, that sounds great. All right, then. So we haven't got too much time left, but are there any common mistakes that you would suggest people try to avoid while they're making their application?
So pretty much any mistakes, like any good broker will know whether you're eligible for a loan or not
Yeah.
before we lodge a pre-approval. So
Yeah.
we'll know any mistakes or any issues are up at that point. But the mistakes usually come actually after you get a pre-approval. So pretty much that's one section where as long as the information hasn't changed, financial situation hasn't changed. So the first mistake is people get pre-approved and then go get car loans or credit cards or go and start a business and leave their jobs. That's going to definitely affect your pre-approval, right? So that's the first sort of common
Yeah,
mistake
you
that
do that after you've signed the contract and everything else is done. Anyway, go on.
no, we wait till we wait till after settlement for that part. But the second thing is actually finding the right property. So again, if you're buying an existing property in a regional, or sorry, not regional, in a metro city, so any of the major capital cities, you generally will be fine. But for example, if you go and find a high density apartment or serviced apartment where there's heaps of apartments in that complex, some lenders might see that as high risk. So they might need a further or bigger deposit to be able to lend against it, or they won't lend against it at all. So if you've gone for a 5% deposit under a first home guarantee scheme, you find a high density apartment, lender says, no, we won't lend against it. You've got to find a new lender, new application. And then the third thing is the valuation has to match what you pay for on the contract of sale. So if it comes in lower than what you've paid, then you have to either contest the valuation, or if the valuation's not contested, then you have to pay the difference in the shortfall or find a new lender that may value it higher. The pre-approval mistakes, we usually cover that well before, but even seeing someone like the benefit of seeing a buyer's agent like yourself, those other two areas, finding the right property on top of the value of it you're not overpaying for it, that's really crucial that buyers sometimes can fall into, and that affects the loan approval moving forward.
Yeah, that's a really good point. Okay, so just wrapping up then, any extra quick tips or myths you'd like to mention?
I think the only quick tip is just having the conversation today can open up an opportunity. Again, like we spoke about employment previously, I do a lot of inquiries that people are potentially getting pay rises, let's say end of financial year, June. But without knowing your budget or your borrowing capacity, you have nothing to work towards, right? So if you start the conversation today, you might not have the savings yet, but you'll know what savings you need to get to. You can also, when you provide all your info, we can do a comparison of what you're earning today and say you get a 10K pay rise or, after June 30th, we can then estimate what your borrowing capacity would be. And then at that point, you know your budget. This is owner occupied. This is our capacity for that. This is our capacity for investment. And then speaking to someone like yourself or even looking at realestate.com, okay, well, these are the properties I can buy for in this bracket as an owner occupier. Spoken to Debra, these are the properties I can buy as an investment across Australia. At that point, you know pretty much what you actually want to do more so. And then you work towards it. And then even if you start the conversation today in May, you could end up getting a pre-approval in September and might find something in October and settle by next year. But at least that process started from today. I'm sure you've probably spoken to people looking to buy a property since January this year. We're already 6 months in the year already. So definitely 6 months have gone by like that. So definitely can shorten that time frame if you do speak to a professional to start that process.
Yeah, and I guess that is a very, very good point. Like, people, once again, shouldn't wait till the very last minute. It's fine, and both you and I are happy to speak to people in a preliminary phase because it's so important and it can save the first home buyer so much stress and save them a lot of time because we can put them on like a direct path rather than them like, just wondering, and gives them something to work towards. That's very true. Okay. Well, thanks so much, Vangeli. It was great to chat. And so for everybody who's watching, thanks very much for tuning in. If you would like to know when our next session would be, just make sure you subscribe, and Vangeli's contact details and my details will be in the description box below, and feel free to reach out.
Yeah, that's correct. So either that or Instagram, Vangeli Kollias, you can DM me. We could organise a time there too. So pretty much any sort of social platform, we're available.
Yeah. All right. Good to know. Okay. Thanks for today. See you later.
Thanks, Debra. Appreciate your time.
Okay.